Well, in other news, the manufacturing sector continues to struggle on the back of a low demand and consistent power cuts. Manufacturing activity reflected in the PMI continues to be sluggish. The Kagiso Purchasing Managers Index edged up slightly in March to 47.9 points from 47.6 the previous month. Numbers below the key 50 points mark indicate difficulties in the sector, while those above 50 represent an expansion.
The manufacturing sector continues to show signs of being under pressure, still struggling to recover from the turbulent 2014 characterized by strikes. Weak demand and poor power supply are mostly to blame. The employment sub-index increased by 4 points to 46.9 points, but remains below the 50 points mark, an indication the sector is still shedding jobs. With administered prices going up, the sector is in for an uphill battle, with input costs expected to increase.
The increase in the fuel price and petrol and diesel could have a negative impact or could actually see this price index rising further. And then if you combine that with the electricity price hikes, input costs for manufacturers can actually go up quite a bit. So we expect that price index to sort of remain quite high.
The manufacturing circle, representing local, medium to large manufacturing companies, says the first quarter of the year has been challenging.
There was a huge opportunity for us to make a stronger recovery subsequent to the very negative circumstances that we faced last year in terms of labour instability and so on. But of course it was thwarted by the huge number of outages that we had to face. As soon as it hit stage 3, the Eskom outages, it means that furnaces are actually being switched off at heavy industries. Those take a huge amount of time to come back on stream again, and of course there's significant interruptions at a local level because of municipal inefficiencies, which keep on undermining manufacturing growth and the opportunity to actually pick up.
Despite overall difficult conditions in the sector and the decline in the index measuring expected business conditions in 6 months' time to 60.8 points from 64.4, indicating purchasing managers remain optimistic about the future. Gloria Sefako, SABC News, Johannesburg.